One of the oldest sayings in trading is, the trend is your friend. Establishing a trend is crucial, and if you take away one thing from this lesson and perhaps the entire chapter, trading against the trend is like swimming against the current. So establishing a trend, as mentioned, is very important. You can only swim against the current for so long until you eventually run out of energy and get swept away by the current. In trading, of course, meaning that your balance will be swept away eventually. So trading against the trend is considered very bad practice. There are exceptions, of course. There are times where you just get several signals at a point in time where the trend may be upwards, but for a moment in time it could stagnate, and it could be a very good opportunity to make a trade in the opposite direction of the trend. Okay, so establishing a trend is very important, but how do we do this? Well, if you look at the left of your chart, there we have several drawing tools. We hinted on them a couple of times already. But yeah, let's look at what we got here. And at the top one, you can select Trendline. So this is just connecting two dots and drawing a line on your chart. And this is your first step towards recognizing and drawing patterns on your chart. So generally, by drawing a line along the bottom or top or lows and highs of candlesticks, we can get a sense of what the current trend is. A general rule is that we need 2 or more touches of our line to be able to speak of a trend line. So one signal, and let's just draw a line here. I've got the Bitcoin chart here all the way back in 2014. Bitcoin has been behaving very, how do you say that? It has respected technical analysis very well over its time of trading. So a general rule, 2 or more touches, what you can do is, okay, price has reached a very high level here, and we have 2 significant points. First of all, this high section, and then this high as well. See the candle wick? It was a point where price started to reverse. What you can do is you start to draw a line from this point to, you take it to that point. That could be one. But what we generally like to do to get good perspective is continue to draw the line. Just draw it all the way up, even when all this data that we see here is not available yet. You just draw the line and this way create some reference within your chart. Let's draw it all the way here for the purpose of this example. And you can see what you've done here is that you've established a trend. As long as price doesn't break through this line, you can say that price is trending down. So you can see it in your chart. Obviously, you can see that price was high here and started to be lower and lower. But if you draw a line, you can start to get a sense of when price may go into the opposite direction. So this whole section, price was in a downtrend. This is what we call a downtrend, price trending down. That's quite obvious. If you draw your line, you can get a sense of when it will be time to buy. And actually, when the time in this case to buy would be is if this trend line is broken. We can say that the trend is broken and the trend could go the other direction. And as you can see here, this was actually the case. The price eventually broke through the line and price started to reverse, at least for the short term. That's one example. The other way around it works as well. So here I've drawn a trend line signifying a trend that is upwards. Of course, here price tried to break the trend line, but every time was bought up quite drastically in this case. And the same happened here. So as long as this price doesn't close below this trend line, we can say, okay, Bitcoin is in an uptrend and you are looking to buy. So trade with the trend. In this case, you would look for buys. And in the previous example, you would either take profit or, so sell your Bitcoin or take a trade in the opposite direction. So sell Bitcoin. A term that is related to that is shorting, but that's not what we're going to get into yet. But this is a downtrend and this clearly is an uptrend. The trend is your friend. This is the time to look for longs, so buying. And the opposite happens, you look for shorts. Now, Bitcoin has been respecting technical analysis very well. A very high time frame example, if we look at the weekly chart, is this one. So this trend line was pretty significant, was all over the internet, actually has 3 touches all the way from the all-time high of just under 20,000 on this chart to a more recent high in June 2019. And you can draw it. There is actually a 3rd touch before it broke through the trend line. Actually, what you could have been saying was that during this time, on a very high time frame, it would have been the time to at least take some profits or not perhaps invest and buy Bitcoin. If you look on the slightly lower time frames, and actually within this pattern there are other patterns, you could say this line, for example, this was a very famous one. People were tracking this and drawing this. This line was clearly in a downtrend. Price struggled to break through, and eventually price sold off quite drastically. If you continue to draw it, well, as you can see, it kind of corresponds with this high volume candle here. This was still a downtrend, and price was preparing to break this downtrend, and it actually did, signifying a further move upwards. What you can see here is that there is a pattern within a pattern. So the general idea could be that it was not a very good time to buy Bitcoin if you look at the entire chart. But if you zoom in, then this, of course, would have definitely been a good point to buy Bitcoin. So trend lines, they are not holy. They can be easily invalidated, but they help you in finding points of reference in your chart. And it's just proven that traders use these levels to either take profit or to buy Bitcoin. So in this case, if you look at the high time frame line, you can see at the 3rd touch, this, of course, this data was not available yet, but if you would draw the line further into the future, the line at this point was respected as a high, as you can see. So it ran all the way to this trend line, looking at the touch here on the left, and then sellers stepped in, or traders took this opportunity to take profits. Before, there was a high volume breaking of the pattern, and that's usually a very important signal that price may go into the opposite direction. If this happens on low volume, and this is very important, that signal is less valid, is less strong, and you should really pay attention. So this is where volume and trend line, and then also candlestick analysis, you can see it, they start to come together already a little bit. So you are looking for multiple signals to give you an idea for a trade. One thing that I would like to close off with, let's look at a Tesla chart. You see the same thing happening. It doesn't really matter if you trade Bitcoin or Tesla or oil or peanuts. This behavior, it's just a registration of supply and demand, and you can start to recognize these patterns. One thing that trend lines generally like to give you, and you can see it happening here, the trend was downwards. It eventually broke up, and price likes to come close or actually retest this level of the trend line. So if you draw it here, after the pattern has been broken, after the line has been broken, the actual position of the line on your chart could be a point for you to place your orders. So you recognize that the downtrend was broken on Tesla. You think, hey, I want to get in. Well, one thing could be at the breaking of the pattern, but that is generally considered quite risky. One way to do this is to wait for price to return to this trend line. And this happens all over the place. Again, you need to play around with this yourself. So spend at least an hour looking through charts that are interesting to you. So it could be any stock or perhaps gold or silver. Draw some trend lines and then see if this really works for you, how you can establish trend lines, and then how price behaves when it breaks a trend line. Incorporate that. Incorporate also candlesticks and volume into that, and then you will see that you can start to make some sense of your chart. Next lesson is going to be not about diagonal lines, but horizontal lines, horizontal trend lines. And that will take you one step further into making sense of your chart. Very important lesson. See you there. Horizontals.